Welcome, everybody. It's October 29th. The Market Update Desk with Scott Riley, NMLS number 157524. As you can see in the back, it is a bright, late October sunny day in West Michigan, and it's a little over 70 degrees, so it's really nice outside. Today, kind of starting off the day, lots of stuff going on. We did have oil prices. WTI crude oil fell below 70 yesterday, and it's continuing its downward trend today. And we're testing the bottom support of $67 a barrel. If oil prices get under this level, they may test the September lows of $65.29. Now, this would go a long way in helping our inflation numbers because so much runs through or is a derivative of oil cost and gasoline costs. So that's a really good sign. And it is a little surprising with everything going on in the Middle East that we're getting a downturn in oil rather than an upturn with instability in the region. So that's a little bit of a surprise. Today, we got the September JOLTS report, Job Opening and Labor Turnover Survey. And that showed job openings fell to a revised 7.861 million. Originally, expectation was 8.2 million. Now, the number came in from those downward revised numbers. It actually came in at 7.44 million, which was weaker than, obviously, the estimates. Now, that's a decline of 557,000 job openings, or 7% from the originally reported 8.2 million of expectations. The quit rate, which is also a very important subcategory, remained at 1.9%. Now, that's at its lowest level since about 2015 when you extract COVID from it. And what it shows us is people are not really willing to leave jobs, and companies aren't poaching employees like they used to, especially during COVID. So that's putting a little bit of cap on wage pressures that had been creeping up. Now, in the JOLTS report for government jobs, it shows hirings were down minus 132,000, and hires went up, also fell 22,000. Now, in the BLS, in comparison, in the establishment survey, it showed government jobs up 31,000, and in the household survey, up 785,000. So we're getting back to this contradictory information, and it's clear that there's no concise data that can be derived from it. Now, looking at the leisure and hospitality, we see the same thing: declines in openings and hires. JOLTS, but 78,000 in the previous month's BLS report. It's just these things don't make sense and point to errors in the jobs report, especially within the seasonal adjustments in September, and maybe that's why we got that blockbuster number last month in jobs. Now, one of the payroll companies, TriNet, gave an interview and quoted the following on Friday: slower economic growth, higher interest rates, and generally cautious outlook resulted in a third quarter of net no hiring amongst their customer base. While the headline jobs report may have been generally positive from the BLS, over the year over year, our experience has been different materially, and growth in several sectors except government, construction, and healthcare have been slowing. While our core verticals of technology, life science, financial services, and other professional services have been very muted. So once again, are we really getting correct data? And look what the last jobs report did to the bond market. That's what started this rocket upwards within the bond market and consequently mortgage rates. Now, we also got the the Conference Board of Consumer Confidence. It was really surprising to the upside. That showed that consumer confidence in the index rose from 99.2 to 108.7 in October, which is the highest level since January. Big reason for this was confidence in the stock market. Consumers expected stock prices to increase over the year ahead, the highest reading since the question was first introduced in '87. So we have much higher consumer confidence than expected, and that really set the tone for the bond market going red this morning and not helping us out. Now, in the meantime, what have we seen in the bond market? We actually saw a lot of pullback, a lot of clawback. The 7-year auction came in today, rated, and that was graded about a B minus. So that bounced back in the last hour and a half, the bond market, and we're actually in the green today. We 10-year bond is down about 4 basis points, and mortgage-backed securities are now up about 10 basis points from being down at one point, I think 17 basis points. So big swings in the day. Home values continue to rise. We did see Case Shiller home appreciation today come in at up 0.3% for August, and that's showing a continual increase in prices. And now that looks like we're up about 4.8% year over year. So it just shows where home values are going. FHFA came in and showed also a 0.3% increase for August in home prices, and they're showing home prices are up about 4.2% year over year. Now, when we start talking about home appreciation compared to interest rates, that's why prices are so much more important buying now instead of waiting to the lowest interest rate, because buying now is going to save you more money than any change in interest rate. Apartment List gave us some positive news on rents today, showed that new rents declined 0.7% in October and are now down a full 0.7 year over year. So that is great news. Maybe seeing some downward pressure on rents, which will flow through to inflation reports within the housing costs. Within the shelter costs. Mortgage-backed securities, like I said, we actually got a little bit of an uptick today, and 10-year bond fell down. It popped above its 200-day moving average resistance level of 4.33, and now we're down to about 4.29. I do have a suspicion we're going to be bouncing up and down. I don't see dramatic drops in the bond or mortgage-backed securities, at least probably for a couple of weeks, even with all the data coming out yet this week. So there's some good news that came after 12 o'clock today, and we will keep you updated with everything. Excuse me there. Give us a call. We'll help you get pre-approved, get you into that next house, get you into your first house. Kind of explain why maybe refinancing, even at higher rates, could save you money on your total global weighted interest rates on all your debt. Give us a call, 616-293-2189. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan. Take care.